So the glaring examples are going to be workers' comp and the endorsement language. So additions to the policy, or what a lot of people like to call riders, that either give additional insured status, primary and non-contributory status. What do all those things mean? Let's not even worry about that right now. Let's worry about they are elements that are add-ons to an insurance contract that are very, very commonly required. They often lead to disputes between a subcontractor and a general contractor because, of course, they're very often premium bearing. Now, a subcontractor can purchase a policy with what's called blanket additional insured or blanket endorsements, which means they're there to begin with. However, the problem can still arise because you can either use that blanket that basically says anybody who wants this gets it, or you can have a specifically named one that says Craig's Plumbing gets this. The one that says Craig's Plumbing in a big loss event has priority over the one that's blanket. And if you've got multiple pieces within a project that are being called into play, a lot of the GCs, a lot of the project owners want to see that named endorsement. That's the biggest one. The other one's workers' comp. And of course, what are the limit requirements? There are actually, everyone's saying, I have workers' comp, I'm good to go. Well, yes, but workers' comp has two different components. One is the actual medical and loss of wage and other type benefits for an injury. The other component is employer's liability. So work comp shields a firm from being directly sued or directly gone after in the event of a workplace injury. Otherwise, what firm would still be in business, particularly in the construction trades, right? Unfortunately, workplace accidents are just a part of the nature of the beast. And hopefully it's small stuff like, somebody picked up something heavy, they strained their back, now they're out of work for 10 days and had to go to the chiropractor, whatever the case may be. But these things add up, right? So a contract can require that on the employer's liability level, they have state minimum limits, which are one set of numbers, the middle level, a higher set of numbers, or the maximum level, which are yet a higher set of numbers. So all of these things can be in or out of compliance with a construction master contract. And if they're out of compliance, what usually winds up happening isn't somebody figures it out with a ton of time to spare. It's Friday, it's 4:45, you're waiting for your paycheck from the GC, and the GC goes, "Can't pay you. Your insurance is not compliant." That is the most common situation. And then on our end, our team is getting ready to go home for the weekend. It's 4:50, 4:55. This happens every single week, and we're happy to serve our clientele. It's what we're here to do. But just telling you how it goes down. And sometimes it's an easy fix. Sometimes it's just they presented an old certificate. Other times there's nothing we can do at 4:45 on a Friday because it requires a premium bearing endorsement that has to go through underwriting. So the biggest thing there is when you enter a contract, make sure that you have the right insurance. Do not enter a contract, which many GCs will let you do, and then worry about your insurance months or even longer down the road when it's time to collect paychecks. So unfortunately, it's a very common occurrence that tradesmen will not check their insurance at the time of bidding on a contract or at the time of being awarded that contract. And many, many GCs, for whatever reason, aren't in the habit of checking until it's time to issue a paycheck. So it's very important to know that your risk management program, your insurance portfolio, is compliant with the requirements of any job or contract that you've entered into before it's 4:30 or 4:45 on a Friday and you're being refused pay. So most GCs are going to be fairly decently insured, right? What they're really concerned about is making sure that their subs are compliant, which typically means that the subcontractors have insurance that is equal to or better than what the GC has. And almost universally, that the tradesmen, the subcontractors, have the GC listed as an additional insured on their policy, often with primary and non-contributory wording, and often including a waiver of subrogation. Those are the kind of three big endorsements. And what happens if those tradesmen, the subcontractors, don't have those things, or is it increases the risk placed upon the general contractor thousandfold, which is why they react the way they do and they refuse to issue payments until that coverage shortage is solved, et cetera, et cetera. Another thing that is a huge trap that a lot of contractors fall into is they assume that because they're paying somebody on a 1099, they are not going to have to count towards their workers' comp payroll total. That is a fallacy. Another fallacy is that everyone you pay on a 1099 is an independent contractor. Yes, a 1099 is how you're supposed to pay an independent contractor, but it would behoove any business owner, regardless of their industry, to do a little research on labor law. And what is an independent contractor? Just because you pay someone on a 1099 does not make them so. What makes them an independent contractor is actually how they are treated and the restrictions and covenants placed upon them in your relationship with them. In short, if someone is an independent contractor, you have very, very little control over how they do what they do. You can control what the project is and what tasks they're given, but you really cannot forcefully control when they do and don't come to work and how the project is and isn't completed outside of, let's say, legal guidelines. So if you're doing that, even if you're paying them on a 1099, there's a fair chance they're actually just a regular employee. And what happens is when your work comp comes due for audit, the auditors double check all of this, and or if your subcontractors are uninsured, so they don't have their own workers comp and they're a true 1099, they're just going to be added to your payroll and you get a nasty surprise in the form of a large additional premium bill from your work comp carrier. Let's go back to work comp for a minute, and I want to tell you a story about one of the top 3 most interesting, we'll call it, claims that I have experienced within the agency within my career. And we had a pressure washing vendor who was out at a house, and also at the house was a painter, completely unrelated tradesmen. One guy's painting, one guy's pressure washing. Homeowner hired both of them. So the pressure washer, who we insured here at Harry Levine Insurance, had a ladder that wouldn't quite reach as high as was needed. But he borrowed a ladder from the homeowner, fell off the ladder, and I can't remember if it was an arm or a leg, but he broke bones. And he did not have workers' comp. But his PI attorney advised him to sue the homeowner. And because he did not have work comp and the injury happened on the homeowner's property, there was actually a strong legal argument that the homeowner's liability from their homeowner's insurance policy might trigger. So at the very least, they had to provide legal defense via their homeowner's insurance policy, all because they let the pressure washer use their ladder and the pressure washer fell off it. In a nutshell, a homeowner wants to verify that a contractor has workers' comp insurance, has general liability insurance, has other lines of business that may be applicable when they come on their property. Because just because it's a private residence doesn't mean that you can't wind up sued by the contractor you hired for something they did and hurt themselves doing on your property, regardless of whether or not you're actually negligent.